Hello from the children of planet Earth. Hello from the children of planet Earth. Hello from the children of planet Hello from the children of planet Earth.
What's up, everybody? Good morning. Happy Tuesday. Get started here. All right, so we got this week. How are y'all doing? Good morning. I love you guys. I love seeing y'all every morning. My favorite team in the world. Apple gapping up and going to the Apple's gapping up, huh? Okay. All right. Get jolts in half an hour. It's a big deal. ISM non-manufactured PMI numbers 30 minutes from now. It's a pretty big, busy news day today. Plus the jolts. Those are some good data points coming out. Market's trading out just a little tiny bit. Resilience negative, so means we're gapping down at the open. Low consolidation. Looks like the market's trying to pull back a teeny little bit. Oh, we'll see if we get that. I bet the music's too loud. It sounds like in my... Let me turn it down. All right. Earnings today looks like we're not really decent size. Nothing, no big tech or anything crazy. All right, let's get our stuff ready to go. Get ready to roll. Everybody get your cheat sheets ready. Got it. You have a good day. Oh, is it 8:30? No, one more minute. All right. Good Good morning, everybody. Good morning, y'all. Good morning. Good morning. Some good tunes. Cool. What's up, everybody? Good deal. All right, let's see what we got. I mean, gap down, res is positive. It does. This low consolidation has me worried. I don't know. Like the way that it looks, I'm just going to share really quick on the hourly chart. Anytime you see this, like this always worries me. Whenever the market pops and consolidates lower, like this, ultimately, I hate these, right? You'd rather be consolidating high and dips come up. So I don't know. Call me like a worry wart, but it doesn't seem like something I like. Just analyzing res out the door, 60s really quick. Let's see if we can't get a quick little. So S&P scalp to half. Let's go. Half gap scalp and positive res. 60, 70 is enough just to get some movement. Here to here. Just a little bit. Tiny micros, nothing crazy. No breaks, no anything. Nothing looks terrible here. Oh, but then we get hedge pressure in the way. All right. So here's that one. Oh, no. Okay. I'm going to call it. So I got it, but hedge pressure's in the way and we're dropping. I went ahead and closed. I just closed out. Forget it. I took the resilient scalp, but notice hedge pressure's here. It's going to be a fight. Let me wait till the 30 minutes we have for the news. So what happens in 30 minutes, we have a news event. News event things are going to be random. So I was kind of hoping that I would just gracefully run up to there because it was about, 12 points or so. And we could break through hedge pressure if resilience is positive enough. So I said, okay, I'll take it. But the fact that it's possible that will happen and we got news event in 30 minutes anyways, it's going to be a 30-minute probably fight just to have that happen. So I closed out. So that's pretty quick in and out. I guess you guys can see why I did that. Nothing. We're going to wait now for that news to come through. Dressed in hedge pressure. How dare you show up and ruin my morning? Well, you don't ruin my morning. You saved my morning probably. Yeah, we don't bet on hedge pressure breaks here. We let it do its thing. But UQQ bear short up. You have open, kind of blue open resistance right there. Rest numbers are still positive, so it's going to try to push. It's going to try to go for sure. I just don't know. Everything in my body tells me this is a setup to short today. It's getting there. Res is dying pretty quickly. So let me hit that half gap short and pull back. UVXY has no... Well, I mean, keeps telling me. My brain is just wanting to avoid the long side again. It's like eventually at some point, it's looking like it just wants to have a reset day because of all these hedge pressure short setups, the SUs and stuff. We've had those for a little bit now, right? Let's flip the other way. Okay. Take a quick little breakfast break here. Good morning, Wisdom King. What's up, y'all? What's up, friends? Remember to get the smash like button. Give us some love really quick. All right, I'm going to tell you guys one thing. If you have not tried out Rocket's, going to give you guys all one little piece of advice. You can take advantage of something today that I forgot to do. You go to the main website. Our extended trial is no longer... Okay, our extended trial is $35 a month. Click this button here for the $200 Pro Plus. $35 a month for 3 months. You can check it out. Please do that now. Because I forgot to change this button. It'll still let you do it. Officially, it's now $79 a month for the extended trial. We raised the prices. But before I change that, you can do one more time at 35. So go get there before I go change this button. I get one chance. You did it. Extended trial is now going way up. $79 a month. That whole $35 thing we did for our first year of launch is over officially as of now. So if you guys haven't signed up, go do it and check it out real quick. Lock it in. Last little piece. Okay. Marketplace coming out, and we have a deadline now for our first proof of concept beta launch. 20th of December. Wow. 20th of December. It's 2 weeks away. Ooh, Christmas coming early, guys. I love it. I want to show y'all so bad some of the things, but I can't show you yet. All right, I'll give you a teaser. You want to see a teaser? I'll show you a teaser. Okay, we're just waiting for the news now, and we're going to come through and trade a little bit. Ready? I'll give you a teaser of the search bar. There she is. I can't show you anything else. Just a small little thing. Jace. What I wouldn't give to be the moon in that picture. Yummy. Nom, nom, nom. So anyways, this is the search, you know, where you search for your different categories and stuff, whatever you want to do. And then we have one vendor, I'm sure you've heard of them, that's going to be our launch kind of prototype. We're working with him right now just to test out all the pieces. So he's a pretty good friend. And he's one of the bigger guys that you see on Twitter and Spaces and stuff. He has a huge community and all that. And so this is a buddy of ours. He's working with us pretty closely right now to build out the first vendor page while we build out the pieces where vendors can create their own pages and stuff. So we might even launch the prototype with him in a beta sense first, just to test it out as that's finished up. But that's it. So essentially you'll be able to utilize all the things that we've built from scratch. The platform we've built, the Discord bot we've built, there's a lot of things that we've built. So any trading community out there will be able to essentially white label our software products to create their own communities out of it. Or essentially, like, you have a trade room and you want a Discord bot that automates your roles, a Discord bot that automates whatever alerts you program or scanner settings, or even your call outs. Say you buy a stock and you want the Discord bot to send that message to everyone in the community. That's the stuff that nobody does that we're going to do. So like I said, we're about to revamp the entire training education space with the things that we're offering. And we're going to keep building stuff on top of that. So while we're coming to completion with our own tools inside of Rocket Scooter, you know, and inside of our community, what we're going to be building for us next is to automate red lines, yellow lines, catalysts, things like that. And then start building the rule assist mode that we've been talking about for, you know, years. So what we're building those for our tools, and we'll also be a vendor on our own page, right? So, but going forward, the idea is that you'll have more interactability with your communities. Every time you join a trading community, it won't be like this weird piecemealed thing. It's going to be standard software that everyone can have. Yeah, we built like, you know, 5 different things from scratch. So people will be able to white label our products. My spidey senses were correct to get out of the long. Now again, resilience is still positive enough. I wouldn't take any trade here on the long side, you guys, personally, that I'm looking at. But whatever y'all do, I don't care about what. But I wouldn't personally take any long trade. Let's do an all things being equal kind of assessment. We always say that. All things being equal, let's test everybody. All things being equal without a catalyst, if you were to take a guess at what the high of the day is or where we close below what number? This is the rule that we always talk about. We always start off with the trade plan by starting high and aiming low, right? So let's talk about by the end of the day with the rules you guys know so far. Everybody type in chat on the S&P. We'll do a couple of these. or you expect the price to close around the highest point, like or the end of the day. This is using our bull zone and hedge pressure rule, right? Just to kind of guess what the whole day is going to look like. Yeah. So everyone take a guess. Remember, the rules are when all things are rational, you have certain high probabilities that you interact with hedge pressure in the zones is similar around, and the bear zone correct, and below hedge pressure. All right, so at the end of the day, as Rowan has said, you guys are correct. Now, it may pop above that by the end of the day, the destiny, I guess maybe I asked the question wrong, is that this is probably the high. Maybe not just the high of the day, but that's probably like the high of the close, right? Whenever the market closes, it's gonna make its way right below here. You have a high probability that you close in the bear zone, check. You have a high probability to close below hedge pressure, check. So the market's gonna be down here. Now it may have an excursion, but its ultimate destiny is to close below hedge pressure, all things being equal for the most part. So now other rules, right? So let's go ahead and mark this, just getting a little trade plane here. By the end of the day, we're gonna close probably somewhere in there. So right now it could do something. So let's talk about what the actual, if there is a hedge pressure break, we always use a couple of rules, right? If you're gonna use the cheat sheet, we're gonna break through DD ratios bullish, check. If you pop into the mean reverting zone right here, you can hit the bull zone tap and come back. So I don't bet that we go above bull zone. So if I want to find like the absolute high of day, I would say this is my anticipated highest, but it's a very low probable move, right? Highest point. So if I were going to sell calls, I would sell all my calls up above 457, because in the best case scenario, if you do this and you do that and you do that, it's very likely to reject 457 and figure out a way to get back down to here. So far, so good. So the best case long scenario is something like that. And it would be weird to break hedge pressure, to break mean reversion, to break bull, and to keep going without a major event. Now we have two big catalysts coming up right now, so to keep in mind that could happen. Or two big events, they'd be catalysts. But at the end of the day, now I have my highest spot to sell calls above if I wanted to sell calls. And I know I have resistances along the way. So now let's talk about if the market is destined, in my opinion, to end its way down here under most conditions, then I know I've got some potential plays. Like I can always short off of half gap to there if res is less than 0. I can always play the DD box short back to here. The res don't matter at that point. Res greater than 0, less than 0 won't matter because you're in a half gap. So legs to short from there in there, and of course off the open we can short off of there as well if res is less than 0. So today I can either play off of here, I can let it break on the event and short it from here to there, or from there to there, or play a 1-2 leg short. And of course my stop would be up in here, the maximum on these 2 legs over here. That's basically it. So right now there's nothing too long off of, as you see, so I'm not doing anything long. Right now resilience is 0, so I don't have any bet that's going to go up through here. When the news event comes out, I'm probably going to short off of something. Bull zone bottom is the highest point, right? So the highest point and the ultimate at the end of the day, we always try to mark like where we think the market's going to close by the end of the day. So by the end of the day, we're going to be down in here, most likely, all things being equal. So end of the day. Sorry, I asked that question kind of weird because I said highest. So at the end of the exercise, I was trying to say is like where I was looking for this answer right here that will be probably closing below hedge pressure, despite what happens between then and now. So any long perps, I would take a trade and get out of the way. I wouldn't take a breakout play. Break yesterday's highs or day 4 highs. Charles, the answer is no, don't expect it. I think I should modify that cheat sheet to really say, this is more like if you break into there, then you aim for there and no higher. Tap only. We don't have a expectation that it has to go there. It's more like when it makes its way to the middle, it tries to go there. So anytime you pop inside of here, I trade it to there and call it a day. It's rarer to have bear zone break to bull zone and keep going. It's one of the rare of the two. Remember that is the 3-point-something% chance under normal conditions. So because it's overwhelmingly weighted in the back test, at least, to stay in the bear zone, that's what this is trying to convey. Not that it has to go there and like I'm trading it to go there. This is the 3% leg. So I need to put some changes to this and probably say expectation is if it breaks, then that's where I aim. Yeah. It kind of looks like you'd want to long it from there to there. That's really I probably should change that. More likely to close in the zone it opened in. So I think I didn't convey that information as well as I could have. So here, it's like if it falls to here, then you get bull zone support. Here, if it goes to there, then I get bull zone resistance. It doesn't mean when it opens here, it has to fall. This is just, I wait for this is where my action point is. Okay, thanks for me. I should probably do that. It's irrational, DD breaks so above, hedge pressure you would size down. Likely so if there was a DD break at that point. This being 30 points away, we might not tap it, but you're correct. Once again, bifurcated market. Nasdaq near highs and ES near lows. Jay has nailed it. Whoa, our weird index divergence. Index divergence rule is kicking off. We're seeing that we have Nasdaq on the high side, S&P on the low side. Who wins that fight? S&P usually wins that fight. I'm gonna take a look at Qs really quick and let's look at monthly map. All right, we've got about 9 minutes until the big data comes out. So uh, 3-to-1 decliners, and this is all. It can go down, maybe a long day if Jolts doesn't crash on the market. I think so. I really think it's gonna find resistance and find its way down today. I really do think so. Yeah, that's correct. So to answer with what you're saying, Charles, correct. If we were to get that momentum to the upside, the blast would probably exhaust from there and come down. Like the highest I expect. It's the rarest thing to go from here through there, and keep going. So normally, if I were long, I would aim for that to be my reward and close out. So right now, I'm going to wait and see what we get. News in about 5 minutes. Let's get ready to go. So we're looking at today's the Jolts. We'll talk about why that's important in a second. Just kind of hanging out here. Love you guys. All right. Service PMI came out a little bit ago. We're going to have the non-manufacturing PMI. That's big news. Non-manufacturing prices and Jolts. What are JOLTS, you may ask? They are available jobs that are actively being recruited for that in a 30-day window can be filled by a company looking to fill them. And that the position already exists. It's not a job they want to create. It's a job that's sitting there and needs to be filled and someone's trying to fill it. And there's available worker to fill that job is also part of that equation. So the JOLTS have been coming down for a little bit as people have been going back to work very rapidly over the last year. Companies gone on a hiring spree as their stocks are not plunging anymore. But now the JOLTS are going up as jobs are being created. And as we looked at the employment numbers, unemployment filings as well, you have some unemployment filings, you know, continuous jobless claims are still going up while JOLTS are going up. So as the JOLTS are going up means there's jobs that are available that need to be filled. We have unemployed folks that need jobs and aren't filling them. It's weird. This weird situation. And when it's the JOLTS are important, it's going to help you predict what the Fed's going to do. Everything they're doing is to look at the labor market right now. The ISM non-manufacturing prices, non-manufacturing side of the world. This is looking at, you know, we had the PMI, we had the ISM manufacturing last week. It's the non-manufacturing, the same thing, just something else, right? The different sectors. Usually these are surveys sent to purchasing managers. They have a better or worse answer to like, how are these different categories in your opinion? New orders, employment, you know, prices, all that stuff go into this. Higher than expected reading is seen as good for the dollar. A reading above 50 shows that it's improving in the eyes of the people you're asking. So it's been improving since COVID. Like, you know, things have been generally seen as good in general from the purchasing manager's perspective. Okay, 2 minutes till the news comes out. I'm sorry, that's prices. My bad. The index itself is here. I was looking at the wrong chart. Anything below 50, it means that the sector is contracting. And as you see, we haven't been below 50 in a long time. You see these numbers really tank below 50 during like crash and recessions, but it's getting really close to 50. So that's the part that makes you see, okay, we had a couple of data points in here where we're seen as contracting post-COVID and earlier this year. So we're gonna see what that read comes out. You know, it's getting dangerously close to 50, showing contraction in the non-manufacturing sector. So we'll see how that works out. Got our data points ready to go, get our financial juice ready to go, see anything that's coming out here, and let's gonna take a look at this, how we run off. News blasts up and down. I could bite on that, Jess. I think I like that. SPY going to be green today? It's hard to say. I don't think it will be. I think SPY is going to have a hard time closing above yesterday's close. But we'll see. All right, here we go. Got the news. Let's watch futures move in that bull zone, in that middle. There's that yellow line right there. Let's take it. Shorting off of that. Let's see if I get lucky. Keep in mind, 523 coordinates. Oh, let me make sure I turn on autosave. Hold on one second. I had to change my settings here. Ooh, is this today? Oh, it's tomorrow. Okay, good deal. Oops. Hold on one second, you guys. I'm gonna refresh my platform because I changed some of the settings here. Let's go read what the numbers are saying. Oops. Back, hold on one second. It had logged me out for a moment there. Hold on one second. Weird. Okay, hold on. Let me be right back for 1 second, guys. Hold on. What is going on here? I'm having some technical difficulties. Give me 1 second, you guys. Sorry about that, you guys. Simjad, if you're here, what I did was I was changing my settings to turn on chart display auto scaling, and what it did was it did all kind of weird stuff. When I clicked that slider, it actually like logged me out of my futures account. It was weird. Like it was all these different things just for that one setting. And it loaded up, it took the scanner and loaded it up inside of the subcharts. So an example, if you go right now, John, if you're listening, if you go here and go to settings and you turn on and off like display auto scaling or auto save and save the global change, it like refreshes the entire platform, and the child charts get scanners added to them. It's weird. And then I get a, you have been logged out, concurrent session or whatever. Then I close everything down and hit refresh, and then my position disappeared. Weird. And I only did that because it's not saving my drawings, which again is something that needs to be fixed immediately if you can. Look at that as well. So when I draw something, it's not saving. It should just be auto saving effortlessly. Like I just draw a line here and it should remember that line all the time. And it just, the auto save, so it just triggered auto save. You can't save it because it's already saved. There's that highest tap right here that we were talking about earlier. Sorry about that, you guys. Had to fumble around with my account for a bit. All right, manufacturing employment data coming in closer to 50. The new orders came in as a beat, which is outlook good for the economy. Let's look at expansion in the job market could come from that as well. If you're, non-manufacturing jobs, you have new orders coming through and the jolts are high, so people could want to, they need to fill those jobs. You're gonna, if you have new orders, people are gonna come through. Now the jolts, let's see what the number actually came out as. You can avoid these indicators to TradingView. No, there's no to TradingView. No, you can't. We can't add our stuff to TradingView, and we wouldn't add our stuff to TradingView. It's just a patent development, like you have little tiny bugs here and there. Jolts came in. Let's see what we have. Why would somebody... TradingView is severely limited on the developer side. You can't build a lot as a creator. Okay, good. So the jolts have been ticking up and it came down. Like our stuff is too complex. TradingView couldn't handle it. They limit how many outputs you can have as a developer, even internally. But even so, we would lose control of being able to create other widgets to display. So jolts expected 9.3, came in low at 8.7. So lost against expectations, but the jolts coming down is a good sign for the continuous jobless claims, as in either A. Well, actually, no. This is not good. I'm reading this wrong. Let me tell you what we're reading. Jolts come down when one of two things happen. Either A, companies are hiring people, so they're filling those jobs, or companies are closing the jobs out. They're eliminating them. We don't need that job anymore. Okay. One of the two is happening when jolts are coming down. So it means there aren't as many jobs available. Why? Well, they're either getting rid of them or they're hiring. TradingView is limited on how you can monetize these indicators. That's not correct. You're missing so many pieces of that sentence. TradingView limits you. If you write an indicator in TradingView, it limits how many outputs you can send to the chart. And it requires you to go get TradingView subscriptions to also show multiple charts and multiple things. TradingView's entire model is to draw people into subscriptions there through that program. You only have ThinkScript. You have a PineScript, which is extremely limited on its interaction with the front end. All of our calculations are done on the back end. It couldn't calculate this. It doesn't even have options data to calculate this. There's no way. TradingView misses the ball by like 15 different ways on why we couldn't use it. TradingView is a great program. No, nothing against them. We love them. That's why we white labeled their charting. But on the developer side, TradingView is good for like little baby indicators, not complex stuff like this. It's absolutely true, Laser. You're an idiot. No offense. You only have a limited number of outputs that you can send. What a nerd. Here. So let's talk about this. Jolts are coming down. It's the same guy that watches the stream with a different name every day and always comes in and says crazy things. He's mad. Let's talk about the continuing jobless claims. He makes a new name every day. It's funny. All right. Taser. Let's go to continuing jobless claims. Nah, he just mad because he has his own trading community that never grows. He like stalks our streams on the daily. The only person that ever does. In reality, he's just here taking notes. He's trying to figure out why we're 100 times bigger. All right, let's go. Jobless claims. Have they been going up and up and up and up? These are people that can't get their jobs back. There you go. Yeah, but you're like clearly wrong because that's not, you're wrong about TradingView. You're wrong on all accounts of that. You literally have no idea what you're talking about though. There's no options data. We couldn't even build this if we wanted to. Number two, this is server-side calculation that streams via WebSocket to the front end. You can do that on TradingView either. Want me to continue? Unlimited outputs, unlimited free charting. You can't do that on TradingView. We built custom widgets on the side that interact with the charts. You can't do that in TradingView. Need I continue? Or can we move on? Why don't you go read a textbook in the interim while we're doing this, and then come back once you're at my level to talk about the thing you don't know about. And while you're doing that, I'm gonna put you in timeout like your fucking mother, and you can sit there and stare at the corner and think about what you did because you're grounded. All right, let's go. I hate when people interrupt the stream. All right, jobless claims, continuing jobless claims right here, going up. So people that have been fired or laid off for non-performance reasons are having a hard time getting their job back. Right? And so if it's the point of people can't get their job back, this is the job pool that needs people. These people need jobs. So if the jolts are coming down, let's talk about them side by side. Hold on one second. Right there, side by side. If the jolts are coming down, are we hiring or closing out jobs? Let's answer that question. Well, there are people that need jobs. These are people that have been unemployed that are not getting their jobs back. Right? So this is bad because it's not like if you think about from like May of 22 until now, jolts were coming down while continuing jobless claims were coming down, which is great. People that were laid off were finally getting their job back, which means whatever kept them from getting their job from here to here, eliminated from here to here. So maybe it's like, you know, if we were to just draw a respective salary, you made 100K and then COVID happened and inflation came through and you got lucky and walked down the street, got 150K because you demanded it. And all of a sudden you had this great job and you got laid off, and now you want 150K and companies like, we're not paying you that anymore. You really only should get that. And so as people are desperate, they start to take like a lesser salary. And they're like, okay, look, just give me a job. Fine, I'll take the job. I'm desperate. I'll even take less, right? So wages, as we've been looking at, have been coming down because the CPI has been coming down in that same particular sense, like the total price of things. And most of the inflation was built into the front end, the cost of manufacturing something, right? Materials were high, labor was high. So that dynamic was played out here where people were getting higher salaries post-COVID, and now they're probably getting their normal salaries. So right here, the last couple of waves of unemployment, this is continuing jobless claims. So these are people that file and are continuing to file week after week, not just laid off. This is like the total sink of people that are filing for unemployment. It's not unemployed people, it's people filing for unemployment. If you think about what that means, it's not doesn't include like welfare and other types of programs where you're just not working. This is you were working, you were laid off for non-performance reasons, and you applied for unemployment insurance. Your company had it. So it means you were fired or laid off. So this is the laid off job pool. And these are people that are not able to get their jobs back. There's something keeping this sink of people from being able to work. And it was weird because over the last couple of prints, the jolts are actually going up a little bit, like jobs are being created, which is weird. Either in this particular sense, either A, jobs are being created or people are getting laid off. And that's the other way to think about it too. Jobs are opening up. So either in the stock market at the highs, companies were like creating new jobs, or companies are laying people off and those jobs are opening back up to be filled, maybe because the salary was too high. So it could be that we're experiencing some layoffs here. And the first time unemployment filings do show that as well. Not a big uptick, but sizable. And when you're looking at this right here, there are continuing jobless claims of people that are not able to go to work. And this is the highest that it's been. And jolts are going down. So is it because the companies are hiring that the jolts are going down? No, because they were hiring, this would be ticking down. People would be going back to work. So therefore, companies are not expanding. The job market is starting to shrink. The labor market. Competition is going to get really stiff for jobs, which means salaries are going to plunge, which means inflation is going to plunge, which means if that is the case, then the Fed is going to start cutting rates early next year, which is kind of bullish for the economy, or bullish for the stock market, but bearish for the economy. And we all figured that all out from the jolts. It's not good to see the jolts coming down and unemployment going up. It's not unemployment fines going up. It means that there's fewer jobs than there are people, which is great for wages coming down and good for inflation. But people that are not working, that have a lower probability of getting a job, is just slowing down commerce in general. Productivity growth or GDP growth in this country is going to slow because of the lack of available jobs and the abundance of available workers. But that does mean that the Fed's probably going to stop raising rates, which is kind of bullish for the stock market in the short term. In general, not good for the economy. What do you think about these jobs being ghost jobs? That just have job listings where companies, oh, that's a good point. Never thought of that. Don't tend to hire as much as they're listing. But the thing is, if they don't intend on hiring somebody, it shouldn't be part of the jolts. That's one of the conditions. So yeah, it's true. That could be a thing. You guys are funny. Poor guy. Army of somebody got bounced. What people find out, right, is that here's an effective way to troll, right? Like right now I'm burying a troll in the legal system. Burying, right? So here's how this works. What people do is they just come in and say anything they want because you guys don't go research to see whatever it is. They're just literally making stuff up just to make stuff up, and y'all don't know what they're saying because you're not going to go out there and try to look up what TradingView does or whatever. And people that just troll will make up anything just to get attention. That's all it is. That's what the government does for their jobs. Finds candidates before the position is even empty. Oh. Are there any implications to lying to Joel said? But I think, isn't it like a survey that the US Bureau of Labor and Statistics like surveys a bunch of companies? I don't know if it's if it's everybody that, like, how often they report. I don't know the requirements of a corporation to report or how often they report. I'm sure it'd be highly illegal to report that, and what incentive you would have to manipulate a global data set with your small data point for the risks that would come from lying. Like, whether you're doing something internally shady with your own company, yeah, I don't think, since this is like all companies, I don't think anybody would have incentive to lie to this for the purpose of that, since one company would just be a blip. It wouldn't even really change the pace. And more like being, if they were lying for some kind of internal purpose for themselves, right? For their own auditing. And even so, if this is all companies, right, that report, it would have to be a gross amount of lying by a lot of companies to sway that data point, right? Because that's everybody. So I guess it's a great thought, Arch, because I'm thinking like, yeah, what would make somebody do that? And so would there be implications of lying to a government agency about, yeah, I'm sure there's very, very strict, very severe penalties for doing that. So I'm thinking at the end of the day, I would rule out any kind of fraud or anything from this bulk data set that contains like all companies. It'd have to be like a global, like a gross, like multi-company effort. And what purpose would they serve to lie to that? It's not like they would lie directly because of the reporting. They would be lying internally for some selfish purpose for themselves. And so I don't think people would be teaming up to lie internally for some reason. So therefore, one or two companies could be the worst actors, and therefore I would say it wouldn't affect the overall bulk data. Great question. That's just my thought. Less than, with less than half of their experience, yeah. You're double-minded about your theory, interview people, and I think you're right, Arsh. I'm thinking in general. You are right that could happen internally for a company's own purposes. Would there be enough? Would there be enough companies doing that at once to create a blip in the JOLTS data? That's the question. That's the real question. Because I would say what you're saying is truthful. I do believe what you're saying does happen. That is a great question. Take a look at Amazon real quick. Yeah, Arsh, that is a great thought. So you work in interviewing people for tech positions for a tech company. You're seeing people with 10 years listed experience, and they know less than you know, which is less than half of their experience. Is the thing in tech we say that if you feel like you have imposter syndrome, go interview people for your company, you'll feel better. Yeah, like companies could be listing jobs just to bring people to their talent pool. And I would say that a lot of people do that just to continuously look for good candidates, right? Now, would that move a data point in the size of the millions? I don't think so. If each company did that, let's say if each company did that even for 10 jobs, right? One job in each field. Like a tech job, engineering job, like a company has, and accounting, procurement, manager role, and say they embellished what they wanted to by like 10. And you took 500 companies times 10 in the S&P, it'd be 5,000 give or take jobs. It would barely be a blip on the scale of millions, right? So even the top 500 companies in the United States hid 100 jobs. Or made up 100 jobs just to test their talent, see what the talent pool is like. That's still 50,000. It's still a blip. And 100 is grossly large. Company wouldn't invent 50 jobs. They would be turning their wheels, interviewing all day long. So the answer is, even if every company in the S&P did, and every company lied to the Bureau about available jobs that they're trying to hire, and the 500 companies, the S&P did it 100 times, it'd still be a blip in a data size 8.7 million, because it would only be 50,000. right? Which would be what, 0.6%. So that'd be really small. The ghost jobs be a constant factor, not influence the change. And AVL, AVL, even much smarter than I was saying, is that it would be a constant factor at all times. So therefore, stupid me, my coffee hasn't kicked in yet, but he's 100% right. All it would do was skew the data. It wouldn't change the trend. I wish I could reach out and give you a high five. Your answer was much less verbose than mine, but that's really the correct answer. It wouldn't, the shape would still be the same. It would just be higher or lower. I mean, I love that smart people watch this stream. Daddy's coffee needs to kick in. It wouldn't change the shape because it would be a constant factor. You smarty pantses. All right, AVL coming with the win. Okay, Amazon and Meta hiring so many people so fast. Meta's engineers were promoted so fast when they were laid off. They were basically unhireable for that position. Interesting. You think my cat disagrees with you? Peter, I didn't ask your opinion on my cat, my cute cat disagreeing with me. He's probably right. He's always right. How can you be wrong when you're so cute? But I can't believe I can hear him every single morning. I don't know what it is when you know, they say that cat, and again, I'm not a cat person, but I have 2 cats, and this is a whole new era in my life having cats, right? I'm learning a lot about cats. Number one is cats, they say, don't meow to each other. Meowing is a skill that cats pick up so they can learn how to talk to us. And that's kind of cool. So anytime I'm talking to you guys, he comes downstairs and walks behind me and starts meowing. As in, he also wants to have a podcast in the morning because he's trying to come down here and say, probably. So Peter, can you hear my cat? You can hear my cat every morning, right? Meow. And he only does that because he hears me talking. And anytime I walk by and I go, hey, buddy, he goes, meow. Like in his brain, I'm meowing at him and he's meowing it back. And I'm seeing, and also in cat world, apparently, you are seen as a member of their pack. They perceive you as also being a cat, just a much bigger one with no hair. They don't think of you as species because they do the same things to you that they do to other cats that they don't do to other animals, which is how they found that out. So according to your cat, and Barb has cats, I think, you're also a fucking cat. And that's the answer. Just a much bigger one. That's worse at hunting and providing, because anytime your cat brings you a little toy or a little scrap or a little trash piece, is your cat is programmably designed to instruct other members of the pack to teach you how to hunt. So when your cat brings like a little cat toy and drops it by your feet, he's trying to tell you you can't fend for yourself, and he's telling you this is what you need to do. You need to go out and kill something and bring it back and eat. You're terrible at hunting. Let me teach you, because you won't survive in the wild. Your cat is telling you that you suck at providing. If they bring you little toys or dead things or whatever. I also learned that anything a cat sees, they're programmed to believe that it is their domain. So why does a cat stare out of a window and look around? It's not because of anything other than they are, if it's in their view, they own it and it's theirs to protect. So they're just guarding their territory. He's saying you're a crappy hunter, dude. Yeah, pretty much. He's saying you look like you need to eat and you look like you're failing at providing. I'm going to show you what you need to do. All kind of fun stuff. All right, we are getting some movement here. Resilience is still on the par. We're here in the middle. You watch my streams sometimes on weekends because I make side comments about the market's internals that you can't find anywhere on the internet. Very profound. Oh, I appreciate that. But I think my analysis is not, like, I have no education in finance, economics. I was never trained in any of that. I'm a trained engineer. So my job when I was younger was to look at data and analyze data. And any engineer can tell you, you can give them a data set on anything that's outside of their expertise, and they can still draw correlations because numbers are numbers, data is data. And drawing logical conclusions is like the skill that you learn as an engineer. You piece together what you know, put boundaries around your problem, try to find relationships internal to those boundaries, and then solve the problem based on what you have, what you know, and what can't happen. And then you create just logical conclusions. And all I ever talk about in economics or the economy or anything, even creating indicators and tools for you guys, is all driven by like that logical process, right? So if I do something that seems profound or different, I'm just kind of chewing on it from a logical standpoint, like what makes sense and what doesn't, without being like clouded by formal training that usually just kind of try to impregnate an answer into you. Like, this is the relationship you should see based on, you know, these theories and that. And mine is like, this is what I am seeing. Let's try to draw conclusions from it. Like when I'm saying I'm looking at the data now and I say, well, the Fed's probably not going to raise rates because this is probably good for inflation. It's not because of anything other than my brain is piecing the things together, and I'm not formally going off of anything that, you know, you would be taught or learn in a textbook. One last thing. I think that that's like a more pure approach to anything. It's just trying to make real relationships. So I think I come across as different than the talking heads that typically just regurgitate the same information. Like I would go on CNBC and I don't hear somebody saying, well, the jolts are coming down. Let's take it back a few steps and try to find a relationship and use the jolts to predict, is the Fed going to raise rates or not? Well, how do I know that the Fed even cares about jobs? Well, because Jay Powell's always talking about the labor market. So then my brain starts thinking, okay, let's tie labor market into his decision-making process, right? And then I remember, oh, I had friends that were like bragging they got like double their salary after COVID. And that seemed weird and like huge. And I think a lot of people got that. Then I'm thinking, okay, so now a lot of people got these huge salaries and now prices of things have gone up. And Powell's looking at the job market, probably wanting wages to come down. And I go, okay, so he's looking at wages. And okay, so I'm always just trying to piece together things like that. And I go, so what can control wages? Well, supply and demand of work versus available workers. Okay, if there's more jobs than people, then people are going to get ridiculous wages because the companies are competing for the job or for the worker. If there are more workers and jobs, then the workers are competing with each other for the job and the wages will come down because the company will pick the lowest bidder at the same talent. So, okay, supply and demand on that. So let's use the jolts, the job openings versus the available people that want a job. It's not just unemployed people, right? It's continuing jobless claims. It's people that were laid off that probably want to be working because they were working before they got laid off. And that number is growing, which means there's more and more people that are like, hey, I need a job, man. I got to pay my bills. And then I think, okay, well, didn't people buy houses at like ridiculous prices last couple of years at that ridiculous salary? And now they don't have the job. And now the number of people that were working that had the crazy house and crazy car and don't have the job, that number is the highest it's been in 2 years. So now I say, all right, there's a lot of people that want a job that now just are having a hard time finding a job since September of this year. Since the Fitch slap, that's the event that pivoted this. Whenever we had the credit downgrade, companies are no longer hiring people as fast since the market pivoted and started coming down. Now we have to think, what's causing that? This is that, remember, that's August, September. This is where we had the downgrade, right? The people that were getting their jobs back no longer can get their jobs back fast enough. So the people that are getting laid off are now growing. They're like, hey, we need a job. The company's like, yeah. We pretty much filled all the jobs that we created. We're not creating them faster than you can fill them. So with fewer available jobs and then more available workers that need a job, there's a huge disconnect. You would think that this number would be ticking down if the company was on a hiring spree. The companies are hiring people faster than they're creating the jobs. then the continuous jobless claims would be coming down, you would think, not up. So what it means is the companies are closing out those jobs, or they had them listed and they're no longer listed. They're like, ooh, we were going to expand, but I don't know. I don't think we can afford to expand, or let's not expand right now. Let's not. Maybe some PMI numbers came out, maybe other things, you know, they're reading the data and saying, you know, God, prices are still high, new orders are down, blah, 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 blah. Maybe let's not hire like 5 more people. Let's just like hold off on that for a little bit. And that's kind of what you're seeing, is that they're like, yeah, the workers, they still want those crazy high salaries and we just can't afford it right now. We don't have the new orders coming through. Let's just not do it. So that's what I'm perceiving through this whole thing. Now, that's just me piecing together by just looking at 2 charts or a couple charts and making some basic relationships, right? And I think you guys can all do the same thing. And that's why I like having these podcasts in the morning, because kind of, I'm not an expert at this stuff. I'm just putting data together and piecing it out. And the conclusion is pretty logical. It doesn't really spit in the face of any like economic theory or anything. It's just drawing a reasonable conclusion from some data trends. So now it's like, okay, fewer and fewer jobs available, more and more workers want the jobs. So then you can say, ooh, jackpot. You have this many jobs and this many workers that's growing and growing and growing. These people are climbing over each other tooth and nail, like a fucking scene of Titanic where they're all trying to climb on the nearest board that's floating. Wages are going to plunge, which is great, which means CPI is going to plunge, which is great, which means the Fed is likely not to raise rates. If the CPI on the surface is going to be lowering on its own due to the supply and demand of jobs versus workers. So now I can say the Fed's probably going to go on their target, because I remember their meeting of keeping rates at 0 at the next hike. And possibly cutting rates early 2024, as most of the Fed folks have pointed that the median rate should be in the low 5s and high 4s, which means cuts. And seen. Where's the trading view guy? Let's see if he disagrees with that. So I just drew it all the way to the Fed. Just based on listening to what everybody talks about. J-Powell's pretty transparent with his motivations. And I don't like that this market's trying to rally against me. We possibly have a housing crash? I think so. I think so. I don't think a crash like in 2008 crash, but I think this could build up a second crash. It'd be systemic. It would take many years to happen. But it would be along the lines of, there would be other things that would crash before housing would crash. Housing wouldn't be the mechanism of the crash. Credit would completely dry up before housing would crash. You don't have that gross participation of shorting the housing market like you did in the days of the credit default swamp frenzy. You also don't have adjustable rate mortgages that are going to collapse the banks underneath them. People may default and bonds may crash or you know, a little bit as people can't afford to pay their mortgages. But the data right now doesn't suggest that we're in a crisis, right? This is just looking like it's trending in the bad direction. It would have to be 6 months, 1 year, 2 years of trending to where things get really weird. But you're correct. So is it possible to have a housing crash? It could build up that way, but I believe that other things would crash first and housing would fall with it. If it did, housing wouldn't be the cause of the problem. And inflation in general would be the cause of a problem. People couldn't afford anything. And credit would drive. So basically everything would grind to a halt. People would, like cars would crash, not like physical crash, but like the automotive market would crash. The retail market, the consumer discretionary, these things would collapse first. People would stop buying TVs before they would stop buying their houses, right? Or start paying their mortgages or whatever. So you'd start to see like everything falling from the environment right now. Louis is going to draw some conclusions about this data on your own. Can do that for learning a few Matt. So thanks. I appreciate it, man. Our job was to teach you guys how to think outside the box and like, don't listen to somebody that just tells you their opinion and be like, okay, this guy, I think so. And I like this guy. It's like, try to draw some conclusions on your own. And then you can be that kind of master chess player, right? That just says from something that you probably never even thought of, especially if it's your first day here today, something you never even thought of. Just one data point called jolts. We now think that the Fed is going to cut rates early next year just by looking at something you probably never looked at before. And that's because Jay Powell tells you the labor market is the thing he's talked about every single time. That's like the thing that they care about the most, because that is the first problem that led to the inflation was the labor market. That shutdown in COVID created that scenario, created that, right? So that is just like, to me, an invitation for me to dig like a chess player and get like 5-10 moves ahead. Can I use this data to kind of daisy chain it to other data and then tie it back to the Fed? Well, maybe he's talking about labor market. Then how do I assess the health of a market? Okay, well, supply and demand. That's the first thing you ever do when you look at a market, is the supply and demand in that market. Anything that's a market. Housing market, whatever. You're buying a house, you're going to look at the supply versus the demand and gauge the value of something versus those two things. So how can we do supply and demand of jobs? Ooh, people getting laid off that want a job. Okay, well, those are the people that are filing for unemployment because they were working previously. They're not living on welfare and not working. They were working and got laid off for non-performance reasons too, which means they weren't fired because they suck, which means it's the purest data set of people that are competent workers that need a job and want the job. So, okay, there's the supply side. And demand side is, oh, jolts, the number of jobs that companies are opening, supply and demand. Oh, cool. Now let's just put the two together and draw some conclusion. And then all of a sudden, now you can take what Powell tells you and then piece together what they say. So usually you start at like somebody tells you their motivation or what they're doing, and then you go back and you try to build something that can predict their motivation. If they're just looking at data, like CPI is a data point we all look at for inflation, the Fed is doing what we're doing. They know how to build the data into their thing as well. They're not just reading the surface level, CPI data. They're looking at everything. They probably have a very sophisticated model that looks at all the PMI data and all this other stuff to really draw conclusions about all angles, right? And so why wouldn't we do the same? We need a rocket scooter retreat, bro. That'd be great, man. That'd be fun. Spend like a week in like some tropical place. Party when we drink and talk markets. I agree. Damn shit's squeezing me right now. Rose right at 0. That yellow line's fighting. Drink and talk markets. That's like the story of my normal nights. Normally I go out with my friends or something. We'll go to dinner. We'll do something fun. But not every day is somebody talking markets. But every once in a while, they'll all want to talk about markets. And it's like, hey, Matt, what do you think? And then I'm looking like drunken professor. All right. On another note, this is getting a little squeezy right here. That's the bull side push. Res is just barely positive. The Nasdaq is kind of drawing things up. I was looking for that resistance off of the yellow, so I don't like the squeeze here. This is not good. So hopefully I don't get squeezed too hard, but I'm now losing the trade. Why is liquidity map changed throughout the day? Well, because price moves, right? So this doesn't show all scenarios. It just shows what's in your vicinity. So like you have so many different ways that, right? Those little guides right there, they're just showing you a piece of what can happen. Like an example is bull long up, right? So if price were to drop below hedge pressure and break hedge pressure, the L changes to an S, so it's a BSU, which would be this one right here. Now, as you see below the blue, there are other options that we do open up. So normally it's like you can take this and stack it under here, then you have just this linear thing of all possibilities, right? So when price breaks through hedge pressure, you have different pivots that are now available, like the hedging flip short. So now you're in that scenario where you have something like that. So it's not the liquidity map changes, the price changes. So the letters are different conditions. If you go in a bear zone and you're in a bull zone, then that would change to B. If it goes to here, it would change to BR. So wherever price is at any point in time when you chime in, those are the current pressures you see. An example is right now. When it's in the middle, price tends to be pushed towards the middle. If this were to push up inside of here, this would say bull long up again. Does that make sense? Did you watch the video on how this works? I recommend you do that. It explains it. It's pretty cool. Usually on the website has all of our videos there. So all this is just telling you is where price is relative to the landscape. If these are mountains and these are mountains and this is a river, where's price relative to all those pressures? And then it just draws the conclusion about where your pressures are and pivots are. Bull side pressure is bullish, bear side pressure is bearish. Hedging is bullish that way, hedging is short that way. So trading, if price were to move, pretend these are like flows of air, right? Like a wind that's blowing. If you were to throw a ping pong ball at here, it's gonna have this push against it. If you were to throw a ping pong ball right into here, it's gonna naturally float and then hold. If now again, the ping pong ball on its own can rally or not rally against this constant hum. You can think of it as like a constant wind that's blowing in a direction. So it gives you a general feel of what the market is doing on its own without an event or a catalyst. But there can be just an abnormal amount of buying pressure that comes in and just buys for whatever reason. And while that wind is pushing down, it's overcoming that. And so now we're inside of here. Okay, now the buying pressure is so much, we're now on the long side of hedging. What do we do here? Oh, there are some particular setups. Okay, so we can trade there's another layer or another set of pivots I can look at. Does that make sense, Pineapple? So price moving into different landscapes is the way to see it. If you think about it actually, I like to use the skateboarder example. You have a bunch of half pipes, right? Skateboarder right here. Just going up and down. So all he's caring about is what's under his feet, right? His or her feet. But the minute, flips onto that side, then he cares about what's going on here and no longer cares about what's going on there. So when you move to a new region, there's a whole new set of obstacles, right? If there are speed bumps right here, he doesn't care about them until he's here. And oh, those are in the way. Okay. So it's the same thing. Here's resistance. Okay. Oh, we broke through hedge pressure. Now it's support. Okay. What do I do at that point? What's going on here? Oh, hedge pressure can be support to the open price. Got it. And that's that. You nailed it. You 100% nailed it. If something abnormal happens and price goes against that pressure that it should likely not go against, your brain should say, oh, the buying pressure is abnormally large against what it should kind of be doing. So yeah, let me get out of the way. That's exactly right. It's like to alert you that something helps me find pivots, but it also alerts me that something's going weird. Like right now, I think I'm in a bad trade because we broke to the bull side, and that's the low probable thing. He nailed it, 100%. So now I know very quickly that my trade can get much worse, and I'm in a really bad spot right now. It may not seem like it on the surface, but I'm drawing that conclusion because the map is we've changed against the map. Okay, so I don't like this today. So right now we're in this is the smallest probability of what you'd expect to happen. So I don't like that I'm on the wrong side of that. So now I would know, okay, this is like a really bad trade now. And pretty close to here, I'm probably going to bail. And that's I'm using the maps to make that decision. All right, I'll be right back. All right, I'm back. All right. I don't know. Either case, my exit on this is like whatever happens, usually you'll test the support. So I would get out right there. So even if I get out, I'm going to get out at yellow if I'm wrong. By all, okay, so starting over, all things being equal, if you don't break hedge pressure, that's the rule. Like the rule is overwhelmingly, if you don't break any hedge pressure or anything, you don't have any lights, then you expect it to end up here or here. Normally, right? So because there's enough buying pressure to overwhelm this and irrational, it's no longer that, that's no longer that correlation. And we just say it's 50-50 now. It's pretty much coin flip. There's not any probability that I lean towards. So because we flipped into an irrational market, we don't have that strong correlation anymore. And that's the one thing. So those probabilities that we state, you know, that I tend to use as my guidelines are only under the conditions of you don't have an unusual or irrational market. So hedge breaks tend to eliminate the certainty that I have that we do close here. It's kind of a no man's land. So right now I'm gauging like, should I close out or not? I'm giving a little bit more time to analyze this. I think if I get down to there, I'll probably exit and just walk away. From here, usually this, you know, 58 and higher maybe. But I already kind of want to start trimming it out. I just don't have that big of a position right now. A small one. Or a medium one, I guess. I'm eating my breakfast right now, so I'm keeping the mic muted. All right, see, this is what I was looking for. Now I have to decide if I really just want to hold on or go away on this one. If it starts accumulating right here, I'm just going to close out for a small loss. This is kind of what I wanted to see. No DD band break yet. These lights are still green. So now what do we do at yellow, right? That's what I was expecting. Hang on to that. Oh, looks like I'm getting lucky today. Now, while I do say is like I lose that confidence that we end up down in here because of a hedge pressure break, usually don't break and then break again. So in this particular sense, I am getting kind of lucky returning to bear zone. At this moment in time, I probably should close out, which is good. That's it. I'm going to call it a day. We got a little bit of profit on that. Breaking through hedge pressure, it's still irrational. The idea that it came back and kissed the bear zone, I'm going to take that as my trade to get out. I'm not going to be in it to bet that we end up down here, even though I'm not really sure. Anytime you're irrational, it becomes immeasurable what those probabilities are. So while we did say earlier that we expect the market to maybe close down here, before it broke hedge, an event broke hedge pressure. And now I don't have that certainty that it's more probable to close here than there. So because I got that lucky play, resilience is still positive. We hit half gap. I'm going to go ahead and call it. Good deal. Okay, so we'll see y'all later. We'll see y'all today for Zoom call. Love you. Y'all have a good day. Thanks for tuning in, and we'll see y'all tomorrow. Again, I'll just take what I can get on that. A couple $100, no big deal. Apple is really strong today. All right, you guys, we'll see y'all later. 4 o'clock Eastern. Thanks for tuning in to the Rocket Scooter Podcast every morning, talking about good stuff, fun stuff. We have a great time here. Love you guys, and we'll see y'all later. Don't forget, our extended trial, this is the last day. It's $35. If you've never tried it out for 3 months, $35 a month. It is $79 officially as of today. But I forgot to change the extended trial link at the top of the page. So by the end of the day, that'll be gone. This is your last chance to do the extended trial at $35. Last chance. We'll see you later.